Live from Washington, D.C., this is Transport Topics Newsmakers, the digital interview series that gives you access to candid conversations between industry experts and a veteran reporter. Sponsored by U.S. Bank.
Hello, and thank you for tuning in to the latest edition of Newsmakers from Transport Topics. I'm Seth Clevenger, TT's Managing Editor of Features and Multimedia, and I'll be your host for the next half hour. In this program, we're very pleased to present another in-depth conversation with a leading figure in the trucking and logistics industry. Today, we're going to discuss the latest on tariffs, trade, and the outlook for freight with Bob Costello, Chief Economist at American Trucking Associations. But before we begin, I'd like to share the following message from our program sponsor, U.S. Bank. For 25 years, organizations have turned to U.S. Bank freight payment for the service, reliability, and security of a federally regulated financial institution and payments provider. The pioneer in electronic freight payment, U.S. Bank freight payment processes more than $43 billion in freight payments annually for its corporate and federal government clients. Through a comprehensive online solution, organizations can streamline and automate their freight audit and payment processes to obtain the business intelligence needed to maintain a competitive supply chain. The U.S. Bank Freight Payment Index is a quarterly publication representing freight shipping and spend volumes on national and regional levels. Download a free copy today at freight.usbank.com. And now, to learn more about international trade and the outlook for freight and the broader economy, I'm very excited to bring in Bob Costello, Chief Economist and Senior Vice President at American Trucking Associations. Bob, it's always great to have you with us on 2T Newsmakers. Thanks for joining the program.
It's good to be here. Lots to talk about.
Yeah, no doubt. Of course, the big issue this year for the transportation industry, and really for many other industries for that matter, has been all the uncertainty surrounding international trade. So much is in flux right now with the constantly shifting tariffs, trade policies are changing, and really, unfortunately, that means it's extremely difficult for businesses to plan for the future. Part of the challenge here, of course, is trying to discern what's a negotiating tactic in trade war or trade negotiation, and what's a lasting policy change that could alter freight patterns in the long run. So, Bob, of course, we're all wondering when we'll have clarity. So when do you think the dust is going to settle on international trade? And when will businesses have that clarity that they need to really move forward with business decisions that so far have been on pause this year?
Well, Seth, you're exactly right. The way I say it is the tariff situation right now in the U.S., it's confusing and it's complicated, right? You've got International Emergency Economic Powers Act, or IEEPA tariffs, right? This is from a law in the 1970s. You've got Section 232 related tariffs. This is around national security, and it can impact both commodities and countries, specific countries. And then you have Section 301 tariffs as well, which is usually imposed on goods from a specific country because of what's considered unfair trade practices. So we've got a lot of moving parts. And as you said earlier, it seems to change, if not daily, certainly weekly. And things are on, then they're off, then they're higher, then they're lower. And all of that adds to uncertainty. And uncertainty, as an economist, I will tell you, uncertainty is not good for the economy. It's not good for businesses, and it's certainly not good for freight. Now, so the question then, as you brought up, is when is all this going to settle? And the thing is, Seth, it's hard to say that because there are so many moving parts, right? So on this IEEPA stuff, IEEPA tariffs, we actually had the international court, the U.S. Court of International Trade actually ruled against the Trump administration, and then there was a stay on it, and so that is still in place, but that could end as the appeals process goes through. July 9th is a very important date for a lot of this because that's the deadline that the administration gave for the countries to come and get a deal with them. So, I'd love to tell you this is when it's all going to settle. We've got USMCA likely to, I think by July, August, it's already going to be announced that we're starting to not renegotiate it, but review it. So I'd like to tell you there's a specific date or a month that we could look at. I just don't know. I'm not comfortable saying that at this point. But I will say I think at some point it's going to settle down because the when you look at tariffs, all of the costs of them are sort of front loaded, and any benefits or perceived ones are well into the future. So I'm hopeful here as we go into the fall, maybe things will settle down.
Okay. We all hope so, and appreciate the guidance on that. Of course, we look specifically at freight. The tariffs really have created this roller coaster for demand and especially port volumes. So, of course, at the beginning of the year, there was a surge in imports, trying to get ahead of the tariffs that were widely expected, of course. Then, new steep tariffs were enacted. We saw a slowdown. Now we're in this ongoing 90-day pause with China. It's expected to drive another surge in activity. So big ups and downs. But from your vantage point and and even hard data, just how much have these tariff changes altered global freight patterns, kind of in the near term and in the short term over the course of this year?
Oh, it absolutely has, right? I mean, GDP in the first quarter of the year came in quite soft. It was down just a little bit, but if you take international trade out, it was actually very strong. That's because there was so much front loading of imports. The opposite is likely to have happened in the second quarter. And so second quarter GDP could be above those sort of expectations, or even above what people think will happen. So there is no doubt that it has changed traditional sort of global trading patterns as businesses figure out what they need to do. Do I hurry up and import stuff, or do we wait? Like some businesses actually took the idea of, well, this is just a negotiation tactic. At some point in the future, it won't be there, so we'll just wait it out and come up with either other products or we have stuff in storage and so forth. So in inventory. So, but yeah, it really has changed, and we've seen it in trucking, we've seen it in port volumes as well.
Yeah. So, tariffs always get the headlines, but in addition to all the uncertainty around tariffs, there's also this plan to impose heavy fees on Chinese-built ships that enter American ports. So this is another part of the trade policy changes. What's the status of that proposal, and how could that change the flow of freight, if it goes into effect later this year?
Yeah, well, we were very worried about that when it was first announced. Now, the reality is, when the sort of final rule around that came out, it wasn't as bad as originally proposed, but it's not good either, right? I mean, I think, but I think it's more shipping companies can deal with it a little bit better than what was originally proposed. So I'm not that I'm not concerned about it, but I'm not like as worried as what originally came out, where I thought, oh boy, this is really going to change things up. And I think some of our exports were even going to be hurt hard by it. However, when they came out with sort of that final rule for the shipbuilding part, they also announced proposed tariffs on chassis as well as containers. And here's the problem. I mean, I've already had trucking companies that buy 53-foot domestic containers call me up and say, the only place in the world you can buy these 53-foot domestic containers is China. The administration says they are looking at putting on 20 to 100% tariffs on those. So we'll have to see. We don't have a final decision on that, but that is also something, Seth, that I'm looking at regarding this bigger picture of trying to rejuvenate shipbuilding in the U.S., which I think is going to be very difficult.
Yeah, and tough when there's no domestic option, right, to avoid a tariff.
That's right.
So that's the situation there. But I also want to bring up cross-border freight, right, with Mexico and Canada. Of course, USMCA. We'll talk a little bit more about the future and the review coming up. But how much have the tariffs, again, kind of on again, off again, and the uncertainty about the tariffs, maybe more precisely, how much has that affected cross-border freight within North America so far this year, and where does it stand right now?
Yeah, so it's had an impact. Both inbound trucks from Mexico and Canada are both down year to date compared to the same period last year. Not a lot, right? I think less than 2% in both cases, but still down. But if you look at the monthly data, it's that whipsaw effect that we were talking about earlier, right? Let's hurry up and get ahead of it, and then maybe it's not a problem, and we slow down. Or you brought in a whole bunch of stuff, and then you don't need as much the next month. So It is down overall for the year, not a lot, a little bit, but it is very choppy on a month-to-month basis.
Yeah. And I mentioned USMCA, the trade agreement with United States, Mexico, and Canada. It's going to hit the 5-year mark here. So I think that's a good time to kind of assess and look back at that agreement and how it's played out these past 5 years. And of course, we're also going to see the agreement up for review, as you mentioned, next year. So I also want to know what you think about that process and what we should expect from it.
Well, first of all, USMCA has been a huge success. If you look at the numbers, what it has allowed our economy to do since it was enacted is we have increased manufacturing output. We have increased manufacturing employment. We are producing more stuff in both North America generally as well as the US. I mean, people, Seth, I go out and I speak a lot, and a lot of people are surprised to hear that the US economy alone is the second largest manufacturing economy in the world by far, right? Now, China is definitely double about what we are. China is about 32% of all world manufacturing output. The US is close to 16% of all of it. And next is Japan at like 6.5%. So, one of the reasons is we've grown is because of USMCA, right? I mean, there's certain things that are really good at producing in Mexico. We get a lot of good natural resources and other manufactured products from Canada. But the thing to remember is about half of all our imports into the United States, and this is a hard one for people to sort of get their heads around, because we always think of imports as, things we're buying, finished goods that we're buying. And as consumers, there's a lot of that. But nearly half of all of our imports into the United States are inputs to the manufacturing process.
Yep.
And so it's vital. And when you put tariffs on those goods, that then increases our production in the U.S. and North America generally, but certainly in the U.S., because these supply chains are so integrated with USMCA. Again, a success. But when you do that, then we become more expensive to produce this stuff, and then it hurts our exports. So it's not as simple. As I said early on, this tariff situation is confusing, it is complicated, and a lot is it's important to realize that. But I would encourage everybody to realize that USMCA has been a success. Now, I don't think the administration wants to blow it up. I do think they want to refine it in some areas, and that process will begin probably this summer, earlier than scheduled. But I'm hopeful that it's just going to be a review, not a renegotiation. And I think in the long term, that is good for our economy. It's good for the Mexican economy. It's good for the Canadian economy. And it's good for trucking.
Yeah. And of course, it also plays into the nearshoring trend we've seen, right? Some of the manufacturing shifting away from China has shifted toward Mexico. So we've had projections, of course, coming into the current year that we'll see cross-border freight with Mexico continue to grow. Of course, Canada is also a major trading partner, a huge trading partner with the United States.
Largest.
Do you expect the nearshoring trend to continue, and do you expect, and what's your long-term projection for this future of cross-border freight? I know we're entering this review phase for USMCA, but what do you expect? Do you expect continued growth?
Yeah, I do. I mean, again, I think when the dust settles from a lot of the tariffs, things will, and we get the review of USMCA. I am bullish on North American production, the North American economy. And again, that's going to be really good for trucking. So I think in the long run, we'll be okay. But there are definitely some speed bumps here recently that and making freight choppy, making the situation choppy. Not everybody's clear on what the future is. And again, uncertainty is generally going to make businesses hold off on investments and so forth. But once we get past some of this uncertainty, I do think that we'll see continued reshoring and nearshoring into both the U.S. and North America.
Okay. Of course, so far this conversation, we've been focusing on all the uncertainty caused by the tariffs because that's the pressing issue for our industry. But I think it's also helpful to zoom out here and look at the big picture. And the tariffs have been tied to all kinds of different policy initiatives, but the biggest piece of it seems to be protecting domestic manufacturing and also compelling companies to shift production back to the U.S. So in theory, if that does happen in the long run, and we do see a resurgence in U.S. manufacturing, in theory that drives domestic freight demand, I would think. Now, of course, if you're a large corporation, you're thinking about where you're going to perhaps build a factory. That's not a change that happens overnight. That's a long-term decision and commitment. And again, who knows if U.S. policies will stay the same or if they'll change again in another few years. So large corporations will be weighing that. But long term, do you envision a shift in manufacturing back to the U.S. driven by some of these tariffs and perhaps new trade agreements? And if so, to what extent? I know it's quite a crystal ball question, but
Right.
do we think we'll see tariffs generate some growth in either reshoring and manufacturing domestically?
Well, Seth, it's a very good question. Unfortunately, it doesn't have an easy answer, right? I think again, getting back to this idea that we are already the second largest manufacturing economy in the world, okay? But what we're not going to start doing is we're not going to start, making cheap goods and so forth. We're good at making more complex manufactured, some electronics, but cars and so forth. I mean, let me just give you an example. So a few weeks ago, I was traveling, and even though I travel almost every week, I forgot the shoes I needed, and I was like, oh no. So luckily, I went into the airport, and there was in the airport there was a shoe store, and I bought a pair of shoes. And I was like, you know what? All this talk of tariff, let me see where these shoes were made. And they were made in Vietnam. Okay. So then I started thinking, all right, let's take that. So if we want that shoe factory to no longer be in Vietnam, we want it to be in the US. What are our options? Well, if we want to still buy, $150 pair of shoes, okay, we're going to have to pay US workers Vietnamese wages. Right? I mean, that makes no sense, right? That's never going to happen. So then if we start paying U.S. factory workers, now let's say that shoe factory is in the U.S. and we pay U.S. factory workers U.S. factory wages, well, guess what? Our $150 pair of shoes just went up $300, $400 to $400. I mean, do we really want to do that? Or I guess we could automate the factory, but it's not going to generate that many jobs. Maybe it does generate some freight domestically, but it's not going to generate the jobs. So my point is, we're good at manufacturing certain things, and we export a lot of that too. But again, if you start tariffing this stuff, then our exports become more expensive. I've already talked to factories, to companies that are manufacturing companies that have factories in the U.S. that said we were exporting, or they still are, but exporting out of their U.S. Factories, but they're like, we're being forced to now produce that stuff internationally in other factories that we have because the inputs to the US factories are so much more from these tariffs. So I think it actually in some ways is counterproductive. Again, the cost of these tariffs hit a lot faster than the potential benefits. So I'm not sure where we're going to be in a couple of, later this year or next year on a lot of this stuff. I will tell you that the sort of the effective tariff rate that we had prior to all of this was about 2% in the US. It went much higher than that. Now we've settled down to about 15%, but that's still, almost seven times higher. I think it puts some of our factories that are doing great stuff in the US today at risk. So again, it's complicated, it's confusing, and it's not as simple as let's put on tariffs and then U.S. manufacturers are going to thrive. By the way, the last thing I'll say on this is, you know, there are no doubt there have been losers in international trade in the U.S., really globally, but also in the U.S. It's easy to point to that factory, and I feel bad for those workers. They lost their jobs. They were working in those factories. But let's not forget, not all the factories left the U.S. For example, there were factories that were in Michigan that maybe some went overseas, but some of that went to states like South Carolina, Alabama, Tennessee, where it's cheaper to produce even within the United States. So again, it is there's a lot of moving parts here, and we'll have to see where it all shakes out. But I am worried that it's not going to have the intended effects that some think.
Yeah, and no easy answer, and that's because we live in a complex world and a complex economy, and the answer is different, of course, in so many different cases. But that's very helpful to think about it. And I think it was Dave Chappelle who said that Americans like to wear Nikes, not make them, and I think that's a great example of one where maybe we don't need to reshore all these manufacturing jobs. Maybe we should focus on the high tech and skilled labor. Types of opportunities, that could be good opportunities and good jobs here. But we will see how this plays out in the coming months and years, really. But I wanted to move past the tariffs and trade conversation. That's dominated the conversation this year, so I really wanted to start there. But even entering this year, the trucking industry had already been struggling through a down freight market for more than 2 years. Call it probably 3 years now. Before we, and here we are now, and this is prolonged. Given all that's happened in the first half of this year, what's your latest outlook for the freight market? When might we see a more significant rebound in freight rates? When you just look specifically at freight, what's your latest projection?
Well, you're absolutely right. It has been a tough couple of years and beyond. I talked to a lot of folks that said this is the worst freight recession that we've ever seen. Now, the interesting thing is, in terms of the volume that fell, it wasn't. The Great Recession was worse, but I think the difference is the prolongedness of this down cycle is really hurt. Okay. On top of it, you had freight rates down significantly. And then on top of that, you had cost up. So the combination of all three is why I think so many in the industry are like, this is the worst we've ever seen. So, I was actually getting more optimistic prior to the tariffs, right? Because we were expecting factory output to increase. Now we think it's flat to down. We were seeing consumers start to go, during the depths of the pandemic, people were just bought up all these goods. And then we moved along in the pandemic and they had bought, appliances and fixed up the house and did all this stuff. And then what they wanted to do is experiences, travel and concerts and movies and all that sort of stuff. And so that, you need truck movements with that, but not nearly as much. And so they as they transitioned over experiences, that's when the freight market went down. Okay. And that we were starting to see flip, but you put tariffs on goods, not on services. So as that happens, it makes goods more expensive. And I'm worried about that. And then home construction, we thought was going to get better, but that was also in part because we were expecting interest rates to go down. Now I think the Fed kind of sits there and doesn't do much. So the combination of all three of those has definitely prolonged the demand cycle in the trucking industry. Now, what may happen though is we were before all this, I was expecting demand to come up a little bit and supply to go down a little bit more. But what may happen is if demand doesn't come up, it's flat or even more down. I do think you see an acceleration, unfortunately, of supply going down even further. That would be a combination of more companies going out of business, as well as the existing fleet, shrinking. And so we may end up in close to the same spot as I was anticipating, just a very different route to get there. Now, when is the timing of all that? It's, Seth, it's hard to say. I want to see where we are after July 9th, what happens with the tariffs, and that sort of thing. So there's just too many unknowns. It's so hard to do forecasting these days. But again, what may end up happening is if demand falls further because of tariff policies, that would, to me, accelerate the shrinkage of capacity. And so we may end up being in this roughly the same spot later this year or at the end of the year, but just again, a very different road of getting there.
Okay, no, that's helpful to think about. And of course, the industry has been struggling with excess freight hauling capacity for quite some time, really since that boom in 2021 attracted a lot of business and expansion in trucking. And since then, we've been struggling to shed the capacity. One issue or one factor that contributes, at least to some extent, to that excess capacity has been this cabotage issue, right? Where fleets compel Mexican drivers with B-1 visas to illegally haul domestic U.S. loads instead of returning to Mexico after making a cross-border delivery. So maybe just a couple words on how the industry is working to address that issue.
Yeah, you're exactly right. So I work with CBP down at the border, and I remember asking them maybe close to 2 years ago now. I said, "Hey, listen, I'm hearing about Mexican B1 drivers. People think that they're hauling domestic loads once they come into the U.S." And I remember asking leadership down at the border this at CBP, and these are pretty conservative people. They don't go out on a limb. And they were like, "Oh, it's absolutely happening." And I was kind of taken back. And I said, "Well, why do you think that's happening?" And they're like, "Well, we see drivers that were daily crossers or crossing every other day that are now crossing every 3 weeks, 2, 3 weeks." And so we asked them, "What's going on? Why are you crossing?" And they admit that when they get over to the U.S. side, that U.S. trucking companies are compelling them to then get out of their truck, get in one of their trucks, and haul domestic loads. And it is illegal to do that. It is illegal for the driver to do it, but it is also illegal for the motor carrier to hire those folks to do it. Some of these people are being paid under the table in cash and so forth. Hopefully nobody's watching this is doing it, but if you are, this is your warning. You better stop, because the Department of Homeland Security, I am in contact with them, and the industry's in contact with them, and they're going to start cracking down, maybe on some of the drivers, but certainly on some of the trucking companies doing this. And this has been sort of shadow capacity, Seth, in the industry, and it's been hurting because they generally pay. These companies will pay Mexican drivers probably a third, 40% of what they're paying U.S. drivers. They're not paying benefits, they're not paying taxes on them, and so forth. And so it's got to stop. ATRI, I think we all know ATRI. ATRI's actually studying this. That's how big of a deal it's gotten. So hopefully we're gonna cut down on it, because it's illegal. You shouldn't be doing it, and I think that would help the supply situation as well.
Yeah, and of course, get away from the overcapacity, and that's contributes to higher rates for everyone. On the demand side, could you give us an overview of truck tonnage trends so far this year? Again, just zoom out, big picture view, and on the volume side, and what do you expect to see in the second half in terms of truck tonnage?
Yeah, it's been choppy, right? I mean, up, down, and so forth. The overall underlying trend was we had hit bottom and started to come back up. But we're going to have to see what happens through the summer with some of the tariff activity and manufacturing. Listen, I think the overall economy is slowing. It's not going into recession at this time. Yes, we did have negative GDP reading in the first quarter. Again, that was front loading import volumes, which actually helped freight a little bit. But I think overall it's not going in. It's slower, below trend growth, right? So below 2% growth expected. Second quarter is likely to be above that, but then as we go into the second half of the year, I'd say at or below, probably below trend growth. But so far, I think we'll probably, at this point, now that we don't have 145% tariffs with China, I think we'll avoid a recession. But no boom in freight. I'm not expecting that. I think it'll be a slow slog with a lot of choppiness. as some of these policies are on off again, you could get like little boosts of freight, and then you make up for that later with softness in freight. So choppy, but the overall trend line is probably flattish.
Okay, that's helpful, and also good to hear that perhaps some of the recent trade de-escalation helps avert the possibility of a recession. Of course, another key factor everybody's watching closely. I also want to dig in a little bit more into market conditions for different segments of the trucking industry. Right, it's a diverse industry. What you're seeing depends, on the type of freight you're hauling and where you're operating and your customers. So, of course, drive-in, LTL, refrigerated, flatbed, maybe take some of the key categories. Maybe just share a few quick thoughts on about the outlook for each of those industry sectors.
Well, so far, drive-in's been better than last year, right? We're seeing volumes early and through part of the second quarter. We're up year over year. Some of that's easy comps, but I thought that was a good trend. If you look at flatbed, it is slowing down, but it is still okay. That's not bad. Again, not bad growth. But one area we have seen some softness in this year has been in temperature controlled. So that hasn't been as good as I was hoping it might be. Again, some of that is we do import and export a lot of food as well. So that is something that could be impacting that. Tank truck, after having a pretty good 2024, it started to slow down late last year, and that has continued into this year. On the LTL front, LTL, so truckload carriers haul more manufactured goods in total, but it is a higher percentage of the LTL business. And so a lot of that is tied around tariffs. And so this is still soft, both in terms of shipments and in tonnage for LTL, down middle single digits so far this year over year. And I think part of that is because of the tariffs.
Okay, that's helpful. And I'd also like to quickly touch on the trucking equipment market, right? Obviously that's slowed down quite a bit this year, given all the uncertainty. It's, pretty understandable that trucking companies have been putting off truck purchases and extending their replacement cycles to wait for more signals on where the market's headed. Do you expect to see equipment purchases take off once there's some sense of finality to some of the trade negotiations, the trade wrangling that we're going through right now? What's your outlook there?
You summed it up very well, Seth, but I will say it's hard to determine that at this point, because there's actually this 232 investigation on medium heavy duty trucks imported, as well as truck parts. And so a lot hinges on that. Of course, the only place we really import finished heavy duty tractors from is Mexico. And so if they sort of waive for USMCA, we should be good there. But there's so much uncertainty. You're exactly right. I think, uncertainty throughout the economy. I talked about that earlier, but also within our industry, you don't want to make these big truck purchases when you don't know what the outlook for freight is. And yes, you may be worried that the trucks become more expensive, but you don't want to get out ahead over your skis and buy a bunch of equipment and then go, I don't have any freight for that equipment. So I do think until there's more clarity, it's hard to say where it's going to end up going. And that's exactly what fleets are doing. They're looking, you said it earlier, but I've talked to fleets every day. They're figuring out how to extend trade cycles should they need to do that.
So we've covered a lot of ground here. Appreciate having you on. But before we wrap up, Bob, I'd love to just open it up here to any final thoughts you'd like to share with us about the economy, about trade, about the freight market, as we look to the second half of 2025 and beyond. Anything we didn't get to, or any final thoughts you'd like to leave us with?
No, I think the viewers just need to stay on top of this, because this stuff can literally change daily. And so it can have impacts on our industry, on the overall economy. So until there is more clarity, and hopefully that's not in the too distant future, but until we get there, it's hard to know exactly where we're headed. And so hopefully better times are coming, but you just need to keep your pulse on it on a fairly regular basis.
Yeah, I'll add that, we at Transport Topics are certainly struggling with the same thing because it changes so much. As soon as you think you understand what's happening, hey, next day there's a court ruling or there's a shift in policy, and suddenly the whole landscape's changed yet again. So covering this has been quite a whirlwind for us in the trade press as well. Bob, this has been a great conversation. I think we've really hit the highlights here. Thank you again for joining the program and sharing your insights.
No problem. It's a pleasure to be here, Seth.
Thank you for joining us today. For more information on future episodes, visit ttnews.com. This has been Transport Topics Newsmakers.